except coronavirus. Breeders, carriers. Oh, big stuff going on in euro this morning, huh? Big stuff going on in dollar. Generally speaking, dollar on the move. One bet. Let's see where we are on the 5-year. I need that on my screen. Okay, we have, where are we in? 5-year, yep. No fill yet on my 5. We'll wait till everybody gets in here. I'm a little early today. Morning for everybody who's just showing up. Got some really good fake vol breakouts on dailies forming everywhere. From the Russell, basically the equity indices are setting up nicely to where we'd be looking the next couple of days to make a long swing attempt. Currently, there's just too much energy in the main markets. So I'm going to go ahead and keep my attention on currencies today. Welcome, everybody. I'm going to go ahead and make myself a quick coffee. I got a doctor friend of mine in New York City. Those of you in macro ops probably have already read this, but I'm going to go ahead and share it out here shortly. He's gone out to point out some interesting things for us. I'll go ahead and share that about coronavirus here a little bit later as the day progresses. We got about 1 minute for the hourlies to set up. That is it's unfortunately too big of a risk move on gold to buy the high there because our move to the midline is just not big enough. We have a vol breakout. I got long this morning on pound dollar. So we're looking for a move up into this range here. It's been shifty a little bit. I think we got some economic news happening in a half hour, all US. So we got crude, new home sales, mostly housing and energy. Euro continues to dump. Let's have a look. So we're going to have to take gold out of the mix because it's just risk parameters are not there. Let's have a look at euro pound because we've got the pound stabilizing, but the euro dumping. Let's make some money today. Yeah, good morning. Morning. Kiwi was up big about a half hour ago. That all came back. Aussie head fake in. Like I said, with the equity indices, we've got all the setups for a fail vol breakout. So a mean reversion move. And you know that it's still a 50% move from top to bottom if we do take that. These are dailies if that does play out. So there's a lot of, and you know, there's a lot of people that are just got crushed. And they're probably just sitting there looking to get long. So it doesn't mean that we're going to take out new highs anywhere. Could mean that. But what it means to me, and we moved into bull quiet, as you can see. So that's bullish for these markets because that means things are taming down a little bit. Except as you notice, because it's the last 100 days, we have tighter ranges here at the top, and then big expansion moves on the bottom. Remember how we've been trading last week as we were trading, day trading these. We get these big, massive moves, a dump, and a reversal that looks extremely bullish, and then we take another bottom, and we want like, so basically we want today, it could rally a lot, but I would expect another move down and then a possible move higher. So that's kind of my game plan on those at the moment, but I'm not, you know, hitching my horse to that entirely. But at the moment, that's one thing I'm looking at. Okay, I'm gonna go ahead and make my morning a little espresso here. We did just have at 8 a.m. We did just have on the currencies. That's a 4-hour, a 2-hour, a 1-hour, a 30-minute, a 20-minute, a 10-minute, or a 15-minute, a 10-minute, a 5-minute, and a 1-minute candle, all updated on the 4-hour chart, or on all those charts, all at the same time. So that means the longer term swing traders who are looking, you know, under day trading, but you know, not like looking for 3 to 5 day moves. They're looking for 12 to 24-hour moves, trade off the 4-hour. Okay. And so in their mind, they're looking to capture moves like, you know, this up here and getting out, or this down here and getting out. So they just saw 4-hour charts and they've made decisions based on that. Their next one will be in 4 hours. The 2-hour people are looking for the counter trend to the morning dump, as is the 1-hour. And they're looking to, that's me, the 1-hour today. We're looking to capture moves, shorter term moves, either continuations or reversals into midsection here. The 30s are kind of right there. The 15s, the 20 to 15s, the 10s, the 5s, the 1s, they're all looking for the banging around. But everybody, all of those people made a decision, some sort of decision, whether it was to do nothing or not, 4 minutes ago. So this is why this 10 a.m. and 2 p.m. are interesting timeframes in the markets, because that's when, you know, all the different traders adjust. So I'm going to put you guys on mute. I'm going to walk into my little coffee prep room there, grind some beans, and walk out to my kitchen and pull myself an espresso, and I'll be back in a few minutes. Also, there will be time. Yes. Post your questions here. Also, if you guys don't mind, like down below, hit that like button. That way it wakes people up. Let them know we're doing it. And if you don't mind, hit the, get the tweet there so I can get whoever's on the Twitters. If you guys don't mind, actually, let's do this one. For those of you that are on the Twitters, please like and retweet that one, share that out. Hit the like button down below if you haven't. And again, I'll be right back, people. All right, what is up, everybody? I see we got some people in here now. Good morning, good morning, good morning. Let's take a look at equities. Equities up about 1%. Let's see. S&P up 0.6, Dow 0.5, NASDAQ 1%, EMD and Russell about quarter percent. Nikkei up 1.25, the bigger. Biggest loser recently. We got Bitcoin down at that $9,000 level. Remember, with Bitcoin, we have a $10,000 month. So ranges of $4,600 are not abnormal. Good stuff. All right, I got a few questions here. Will B-side still have some emails to respond to? I have been in knee-deep backtest building the greatest thing I've actually ever built. My son's not born yet, so I can't say that. Still cooking. But I have built the absolute best strategy I've ever built in my life. Probably the best product I've ever built. It's a long-term portfolio, growth portfolio with a dividends. Pretty amazing. Like 20% combined annual growth rate and about a 17% drawdown max ever. And this is going back 25 years. So it's pretty exciting. I'll get to your questions here in a second. I'm just kind of like going through what's going on. Oh, I can go with live streams. You can now broadcast your ideas and charts to the world in real time. Very cool. We could just get, if we could just get Interactive Brokers to trade with TradingView, that'd be great. Okay. So Will asked me, do I incorporate maximum adverse excursion in my backtesting? Yes. Yes, I do. Max favorable and max adverse. Because that gives me that lets me know how far away I am. So the thing here, let's take a look at Bitcoin at the moment, because this is important. Now the thing about Bitcoin is all you have like 100 different exchanges. So BTC, USD. This one up here is on the Gemini exchange, but why BTC USD? I don't get it. Why is it not? So that's Gemini, BTC USD. Do I have to select crypto? Oh, I see. This is my mistake. Last night I was all exchanges. There we go. So you can see like Bitstamp is at 9,001. And so Coinbase is at 9,012. Let's see, Bitfinex 9034. So it's kind of interesting to watch. I'm gonna stick with Coinbase. Yeah, let's go Coinbase. 9,009. So this is that round number thing. We saw this yesterday with NASDAQ, and NASDAQ is still below that 9,000 round number, even though it's rocking everybody's socks off at the moment. And somebody mentioned Russell on 5 minute. Let's take a look. Yeah, I'd call that a double bottom. Down, and then so the trade for those who took it, I'm staying away from equities at the moment. But that would have been the trade buy stop here. We still could see a nice move down below, down here to shake that one out, because everybody suddenly thinks, oh, the sell-off's over. So there's gonna be a lot of emotion. As I mentioned on Monday, I think. As I mentioned on Monday, there's so much emotion tied into these prices and these markets. There's so many people who've been riding this move up. Let me do let's talk price action and mentality on, and then let's get our, okay. So yes, if we're looking at the NASDAQ and we're in, let's kind of look at this bull quiet regime that we, kind of spent a lot of time in, right? Going from the December lows to these highs. This was all very tame. Okay. I mean, this is a great move, but you can see it's the size of the candles all along the way, very small. Here was a sell-off in, this past summer. This was the spring sell-off. And then we pretty much took off from there. Now, what you want to pay attention to is notice the size of the sell-off, and it took some while. And I want to point this out too, because this looks very similar to this one. They don't always hold this, as this one held a bottom. This didn't. But notice how it went sideways for a while before it took off again. Why did this sell off in November not shake the markets? And why did this one not shake it as much as this one? I'm not going to say it's news is irrelevant. Okay. What I want you to understand is, yeah, I mean, news does help move markets that way, but you also can, we had a lot of things happen, and bad news doesn't really shake the market when you're in the early stages of a bull market, because the price movements are not that wild. And the reason I say that is because you have people who got long in this area here, right? So let's say they get long at 7,700, maybe even 8,000. So when they're up here to 8,400, they're not really, they're like, okay, that's cool. That, they feel good. They're not super worried about their profit. Some people are, so they're going to put stops in. But not everybody's going to be worried about profits as much, because, it's just a couple hundred points. It feels good, but it's not crazy. And then you break 9,000 and you're getting up near 10,000. And suddenly this is where greed and fear come in. And those are characteristics of the way a bull volatile trades. When you think about volatility, when things are wild and crazy swinging, what are some characteristics to that? Well, like, people are scared, right? So it sells off harder, it rallies harder. And that's what happens. So this analysis, this tool, the SQN, remember, it's a trailing indicator. So it just tells you, it's like a calendar. You open up your calendar and it says January, you're in the Northern Hemisphere. And let's say you're in New York. Do you think it's going to be sunny and scorching hot outside? Do you think the right thing to do is throw on a pair of shorts and a tank top and flip-flops and go to the beach? Or do you think the thing would be to put on a coat and some gloves and a hat and your snow boots and a scarf? So it tells you, the calendar doesn't tell you what the temperature is going to be in November. It doesn't tell you it's going to snow or not. It just says, guess what? You're more than likely going to need a coat this month. So of the 31 days in January, echo off. There's some vocals going on there. I didn't expect that. And so like that, in a bull volatile, we know that price is going to move a lot more, because the math of this indicator is, I'll show you here. For those of you that ask, if you click on the indicator, show source code, it'll show you. There's the code for it. You can do what you like with it. Let's break it down real quick. So it's basically the SQN equals a simple moving average of 100 days, okay, times the square root of the days divided by standard deviation. So basically what it's doing is it's normalizing the data. It's telling you that, whoa, why did I do such a thing? It's telling you that the last 100 days, it's going back and getting an average change in price, standardizing it over the last 100 days. And so that way, with square rooting, that gives you the ability to see, oh, okay, so the average change in price from December 12th to December 13th. So if this thing closed at 85.2125 and then the next day at 85.30, so 9-point move, is that right? 85.21 and then 86. So like let's call it an 80-point move. Whereas back in here, you know, you have these small moves. These are all characteristics of that. And then they start getting bigger. And as they get bigger, that turns this into, you can see we go from being down at a 0.5 move to now the change moves is like 2.68 averaged out. So what does that mean? That means things are getting a lot more volatile in this area, bull volatile. And you can see that represented not just down here in the fancy blue color, but you can see that the candle sizes here all through this area are bigger than they were all through here, right? On average, you obviously don't need SQN to say, yeah, this is more volatile than this was, right? Than this was. So I know a lot of people are like really, you know, take this SQN idea and think to themselves, okay, I gotta, you know, I can use it as a signal. And I want to say you don't use it as a signal. What you use SQN for is to just tell you, it tells you what's the weather is going to be like. It doesn't, you know, it doesn't tell you which jacket to put on in January. It just tells you that, hey, it's January, it's going to be cold. You're going to want your cold weather clothing. Okay. Don't make plans to do beach volleyball unless you really want to get, you know, hurt. Okay. So that's all interesting. And thank you for, you know, allowing me to go through that with you all. Here we have, so we were looking at Bitcoin. Sorry, I got a few. AT, good morning. Jay, good morning. We talked about the double bottom on Russell. Let's see how that one's playing out. Yep. So remember that was a long from here, pulls back, and a successful test of that could be very interesting to watch. Nice IJ. I'm playing in currencies myself right now. A little less volatile over there and smoother moves. So I'm doing my hourly, just paying attention to it. So, okay, I got a question from, my next question was from Will again. Why did I pick pound dollar over pound CAD? Well, I don't trade CAD. So the reason I don't trade CAD, yes, this didn't, let's see. What time did that get? That would have, so order here, no fill, order here, would have got filled, would have got stopped out. The reason I didn't trade CAD is I just don't trade CAD. So to me, it's just my statistics over, you know, 20 years of back testing and live trading and everything is CAD's just not working. There are periods when it works, but at the moment it's just not really working all that well. So that's why I don't do it. Yeah, so that was an experience thing. I just know statistically, according to all my statistics and all my, you know, all my history of trading, I have lower expectancy in the CAD, and the few opportunities that I get to actually make money trading it definitely don't outweigh the more opportunities I have of just not enjoying trading it because it hurts. And, you know, quite honestly, one of the things about, you know, you learn about being a trader, newer traders, I'll get to your question, Jay. Newer traders tend to do, let's say, let me throw, I'll do a strategy for once. Let me throw, let's do dollar CAD. We were talking about it. So I'm going to go ahead and add a strategy to, let's throw favorites. Let's trade this strategy, I think. Okay. So boy, let me hide this over here. It's really heavy. Okay, so we got a daily. Let me mess with the strategy. Okay, that didn't affect it. I don't even know what this strategy is really. So order size. Capital. Let's just see if we can get something to work here. I'll just scan through a bunch of them. This is what a lot of new traders do. Oh, what happened? I lost it. Cool. Back to it. Okay. And then let's take it at 2000 and a stop. I don't know if that'll affect it at all. Doesn't affect it at all. Okay. Okay, so we have a strategy here. What we're looking for is we're looking for something. Most traders are gonna look at this and see this nice equity curve, okay, and think to themselves, "Oh, this is a beautiful system." Even better. Okay, here's a nice one. So you can see, basically, they're going to look at profit factor here, max drawdown, $1,200, and they're going to see, go look at these stats, and they're going to see, oh, the profit factor is above 2. That's really good. I put in, basically, I make $12,000 on $1,000 account, whatever. This is a really cool strategy. I want to trade this thing, right? But experienced traders are actually looking for this number here most of the time. Most traders, unless they're have longer term systems, most traders, shorter term traders, are looking to have a high win rate as opposed to a low win rate. I probably have a strategy in here that's better than that. I mean, I don't trade strategies, but geez, that was somebody built one. Okay. Let's just do this. 1,000, 10% equity. Let's go down to like a 5-minute chart, see what happens. So I think this, yeah. So this one's gonna, a new trader is gonna see something like this, and they're gonna be like, "Oh, look at that beautiful chart. I just got to be there when this happens." This isn't even that bad of a drawdown, okay? But experienced traders are gonna see 30%. Actually, let me find my win rate here. So number of winning trades 33, number of losing trades 74. That's painful. But a lot of inexperienced traders are going to see that and think to themselves like, "Oh wow, that's a great strategy. I want to trade that one because it has all sorts of returns." But really, what we're looking for is we want. What am I looking at here? We want to have something. At least me. I want to have nice, easy wins. I want to take my losses, of course. I'm going to take my losses, but I want to have nice, easy wins when they work. And I'm, 75, 60 to 80% of the time, I want to get a winner. And then, 20, 30% of the time, 40% of the time, I'll take a loser. And I want my winners to be 2 times more than my losers. And when you look at your stats, you can see, your average. Like I can pull up my newest system. Actually, I don't want to do that one. Let's go to a production one. Boy, is. I'm hurting today. All right, no fill on the bonds or the notes. 9,000 is that drama, Rama. NASDAQ high of the day is almost 1.5%. It's a good day. So I can find, it's moving far too slow. Win rate, 87.5% on futures. This was back in October 2019. Average win, 5.9. Average loss, 0.78. Now that's not sustainable, and it, you know, definitely don't. I'm not there right now. But when you're in a period like that, you feel really good, right? That's rare. Oh, beautiful day. Yeah, let's get after it here. Let's see, how's gold? Gold should be dumping, right? Okay, so I guess kind of what your idea there was, to answer your question, Will. Sorry, I went off on that tangent. To answer your question, I chose it because statistically, I know that CAD cross is always my worst enemy in there. So I just stay away from them. So I won't trade certain contracts as well, like RBOB, you know, the gas, the whatever it's called, the unleaded or regular gas. I won't trade that contract. I don't trade lumber. I don't trade hogs. I don't trade cattle. You know, they're fine if you can trade them. Sure, go for it. I just don't really have an advantage trading them, so I don't. All right, that was a long answer. Thank you, Will. I think you're congratulating me on the swing system. That's going to be a beast. We're going to release that one through macro ops. That's going to be our model portfolio, and probably, and that's going to be a high ticket subscription deal for hedge fund managers and high net worth, because it requires large amounts of capital to really play out. However, you know, like if you have a $10,000 account, I don't think it would be the sort of thing that you would be looking for. I mean, you're holding positions for like 3 years in a row. Okay, what's rationale behind SQN 100, not other period durations? The rationale, Jay, I guess you're asking is, why does it look back 100 periods? 100 periods is standardized. There's about 220 something 250 trading days a year. That's it. You know, I just did that 100. You can do it 200, you can do it 1,000, whatever you like. So one thing you could do is figure out how many 5-minute candles are in a 100-day range, and you could change that number there. That way your 5-minute, 10-minute, 20-minute, whatever time frame is, would always show the daily regime. That's something you could do instead of having 2 charts. But nothing super crazy about why the 100, other than it's a long sample size. What do I think about Bitcoin today? I was just looking at that. So let's bring it up, Dustin. Cheers. Oh, let me pull all this crap off. There we go. So first things first, let's get some context on it. Okay, here's my 2-week chart. Let's do Bitstamp, because that has the longest. Here it is. That has the longest time frame. Okay. So I've done some work here, but I want to show this. And I'm not sure if you've seen my video, Dustin, on 10,000. But what I want to point out is every time 10,000 is part of the mix. Actually, we wanted a monthly. Every time 10,000 has been a number that is in the monthly mix, the average trading range is $4,600. So this was a $10,000 trading range. This was a $5,000, $6,000 trading range. This one was an $8,000 trading range. This one was a $6,000. So every time and understand this was parabolic, right? So, but even this one, and even this one, and this one, and this one, and this one, and this one, every one of them has been, so this was a $2,000 trading range. This one so far, and that was the lowest so far, a $2,000 trading range. This one has been a $1,000 trading range. And so what that tells me is we have 3 more days. It's a leap year, so we have 29th this month. We have 3 more days for this to travel either up to so down to 8,000 or up to 11,000, just to hit the least minimum trading range. Okay, so 10,000 is actually because you have people who got long here and they said, I'm going to sell at 10, and it gets to 10 and they sell. And then people see 10 and they're like, oh crap, I got to buy. So it's all that price, no trade. Well, I'm long pound cable. I'm long pound dollar right now. And it's a swing. It's on the hourly chart, double bottom, failed vol breakout, long. Otherwise, no trades. So we're just watching at the moment. NASDAQ's ripping. So we're gonna have to take a look at this one. This week I'm staying far away from equities. I'm gonna let them play out, and I'm comfortable with that. So sorry, no trades for us. Okay, so now what you have at 10,000 is when you're up here, you're gonna say, okay, I'm gonna, I got in here or whatever, I'm gonna lock it in at 10,000. Now, this is because most people are just not that skilled at picking stop loss areas. You always see these people, more skilled traders are gonna put stops right below a swing low, and that's how you get this. And this is why we always get, this is like the main part of my trading is the price action and understanding the psychology here. That's why we get a lower low that tends to be a reversal, and a high, like a lot of people say, oh, when this thing goes above here, if this thing gets above 13,880, they'll say, it's going to 25,000 or something like that. And usually what happens is it goes 13,890, 14,000, and then you get your dump. Okay. So I just wanted to throw that out there. So 10,000, now people that are in up here, they got in down here, they got in all these different areas. They're going to say, all right, well, I'm at 14,000 almost right now. If this thing hits 10,000, I'm out. I'm going to lock in profits and I'm going to walk away and not have any more sleepless nights with crypto. And what happens? Of course, you run 10,000 and then you run 10,000 and it just keeps draining. And then all of a sudden you get a below 9,000, suddenly like people at every number below 10,000, every 1,000 point and even 500 point marker, people are going to have stops at those round numbers. So when we have 9,000 getting breached today, a lot of people are going to say, okay, at 10,000, we're going to 20,000. All of a sudden you hit 9,000 and people are like, I'm out. They say, stop at 9,000. Why? Because it's a round number. 8,000, 7,000, and each 1,000 block is a round number that people get. And you get people who will say things like 3,200, 88,950 or whatever. Sure, whatever. But that's generally what they're doing on that. So now that's the monthly. Take this into perspective. This thing went from, I did that video, basically 10 to 20, 20, to 100. 100 to 1,000, 1,000 to 10,000, 10,000 to 20,000, and back down to 3,000. We got down to 3122 back in 2018. So 2019 or 2017, we were at 20,000. 2018, the same month, December, we were down to 3,000. We moved up to 14,000, dropped back down to 6,500. So 3 to 14 is 9,000. 9,000 in half, 4,500. Come down here, 4,500 sell off, and so then you can see, even though I'm not a Fibonacci player, generally speaking, the 50% moves are where things get. So you get tested here, boom. So from 20,000 down to 31. is 17,000. Half of 17,000 is, what is that? 8,500, right? So 8,500 plus 3,000 is 11,500. We overshot it a little bit, probably 61.8%. And same sort of thing down here, overshoot a little bit, and now we kind of wear it out. The thing is, everybody was expecting this, or this when we were at 10,000 a couple weeks ago. And instead, what we got was a spike to troll everybody and a reversal. And then you get things like what's going on in Ethereum, which is just the world's ugliest thing. Hey guys, thanks for paying attention and liking and following. If you are here, hit that like button down below. Hit up the tweet. Like my tweet, retweet it if you will. I put it up a little higher. It always helps. It's fun to get good traders in here to chat and ask these questions. A lot of people ask these questions we just don't know, right? A lot of people don't have access to a trader who's been in the game for a while, so it's cool. Now, as we get down to the 2 week, we can see a little more clearly that there was a lot of drama at this 10,000 area. What eventually dumped, we tried again, dumped, and then we put in a nice double bottom. As you can see, bottom came in, shot up, further low, so we trolled these people here, and then an inside bar, and then we shot up. So typically what happens is you're going to look for a move down into the 8,300 area to probably hold, or even down to 7,800 before we take another stab higher. And if that fails, then we go lower again, and that's just trading. Actually, let me go to my 3-day. I like 3-day charts on this as well. So yeah, as you can see, we did that nice double bottom, triple bottom, rallied almost exclusively for the last 2 months, almost finishing up. And now we're getting our first little bit of drama. Also understand that when markets collapse like that, you would think that things like Bitcoin and gold were going to rally, but they won't, because people are getting stop losses. People are taking risk off the table. People are getting margin calls. There's all sorts of trouble happening. And so they're going to sell everything. It's not an instant, oh, well, that rallied, so this is going down. A lot of people think that that's how these things work. They're not like one-to-one instant moves. These are very simple moves. Okay, cool. Hope that answered your question a little bit there, Dustin. As far as Bitcoin itself, the pattern I'm paying attention to, sorry, oh no, I have it up over here, I think. Yeah. So what I'm paying attention to is more of the weekly right now. We got ourselves what's called a bull flag. That's at least what I see it as. And so, we can do all sorts of things. You can put your stop in here. You can put a stop down below this one. For me, trail stopping in this area is what I'm actually interested in doing at this point in time. Also, I'm happy to change my mind based on new information. So you'll see that you may ask me one thing today and I'll do something different tomorrow. It's because I update new information. Okay, Russell. Let's take a look at the Russell doing its thing. NASDAQ really doing its thing. So NASDAQ, all we're looking to do is we're going to look for excuses to get long if we're not long. Always in long market at the moment. Thing about it is everybody still remembers yesterday and the day before and the day before. So we might have a tough time ripping. So I actually have some I got some information I'm going to read about coronavirus for you. If you guys like. Okay, so this is always in long market. And the thing about an always in long market is you just need a reason to get in. At 2%, we're up 2%. This relief rally, we'll see how long it lasts. But at the moment, that was a beautiful double bottom on the 4 hour, which is what I've been watching. Unfortunately, the risk range on it, you'll see why I didn't take this trade and why I'm saying I'm not in equities, I'm not trading these. So my risk range means that from the high, the buy stop, to the stop out, the range itself is 89.28 to 87.09. So 220 NASDAQ points. So I need to get 220 plus 89.30 is 91.50. And I need that to the midline. We have 91.22. So it's less than 1R. So it's like a 0.8 risk reward ratio. So what I want is a lot of space to the midline here. Okay. And if I don't have that, then the risk means I can't actually take this trade. So we go up in higher time frames and we start looking where there's an opportunity. And you can see on this one, there was an opportunity on the 12-hour to take us up to this. I'm personally watching I'm waiting for this to play out, the daily NASDAQ. So I'm not a day trading it. I'm looking for this one to not take out yesterday's high. And I want this to be less than the move to here. So if we keep going on this, I may have missed the entire trade. And that's what you get on this. If that happens, then you have basically, if this thing rips up and, first thing, everybody's paying attention to gaps. So people have this belief that gaps have to be filled. They don't have to be filled, but they often do get filled because of the fact that people say, well, there's a gap there, so it has to go. And so traders just do it. And then, of course, the algos say, well, I know traders are going to go there. So how do we troll these traders? Well, we'll do it this way. Let's get them up to almost a gap fill, or let's get up to the bottom of the gap and not fill it, and get longs in there really excited chasing it, and then have it turn down again. And, then they have to, they get stopped out, and then they have to buy to cover down here, which brings it up again. And so now what we have is we have this relief rally, meaning shorts, the best shorts in the world were up here shorting. And these were the best, we had a beautiful short that got stopped out, couple of longs, and then all of a sudden the best long in the world just got taken out. And so there's some smart traders that probably were getting in here shorting and they get down to the bottom of the range and they're looking to cover, right? So up, when this happens, they're just feeling pretty cocky. They're trail stopping. So now you start looking at where our stop's going to be. And so first level of stops are going to be anywhere above this area where we would have looked to get long on the 240, right? The next level will be above here. The next level will be above this swing high, and then up in here. So you could get shorts looking to, most likely you bang around up to this area. Most likely they're going to, hit this area here, and we're going to get some resistance because this was support that broke. So we're going to get some bang around, but we may actually run stops because bulls are going to have, bears are going to have trail stops here. And if that happens, then bulls are going to sit here going, crap, I need to get in. And so they're going to chase to get in. And then that's when you get reversals and whatnot. So always in long still. More aggressive traders can be getting in longs. I don't have any reason to be doing that. As you saw, my risk parameters were far, the odds were not in my favor. So I sit back. I don't need to bottom pick or top pick, even though a lot of my strategies are that sort of thing. It doesn't really matter to me. If I catch top, I want to make money. So I don't care if I'm missing this whole bottom because suddenly the fears are gone and everybody's bullish. So, so I got a doctor friend. If you're in macro ops, you probably have in the comms there, you probably already read this, but let me go. I'm going to read it. He's a doctor and it's his thoughts on coronavirus. First, I'm quoting, quote, first, my point of reference. I practice medicine full-time at a large urban public hospital in New York City. I've been here for 25 years and weathered every stress to this institution during the time, including drug, gang wars, 9/11, East Coast blackout, 2 hurricanes, one which shut us down for the first and only time since 1736. 1736. Wow. And Ebola. I sit on the hospital's disaster committee. If you guys have questions, please post them in there. They don't have to be related to Corona. I just feel that I want to get this information out there. I sit on the hospital's disaster committee and have published on disaster preparedness. I also think a lot about personal survival preparation, but here I'm just going to comment on the healthcare system's preparedness, and specifically what I'd refer to as definitive care areas. And for this coronavirus situation, that means ICU capacity, intensive care unit. These are the high-risk people. There is still a fair bit of uncertainty regarding the number of people likely to be infected and the number of those who might benefit from critical care and ventilators. What I am seeing in the general population is that people are asking the wrong question. They're asking, what is my likelihood of getting sick and dying? The better question is, what is the likelihood that the healthcare system might possibly be able to help me in the event that I need it and the healthcare system becomes overwhelmed? From inside the system, I would say that the likelihood right now of your ICUs becoming overwhelmed if stressed by a large influx of highly contagious patients requiring ventilator and other high-level support is nearly 100% certainty. The quick and dirty explanation of why that is twofold. One, staffing, attrition from becoming infected. So doctors and nurses and healthcare official or providers themselves are not adequately protected, and staff will fall ill. So they're going to get sick too. The helpers are going to help or get sick themselves and or stay home out of fear. Two, supplies. I've been looking at the country of origin for all our consumables. It's about 60% made in China, another 10% elsewhere in Asia. And that's not even counting drugs. I am sure similar vulnerabilities exist in many other endeavors. Food chain supplies, city services, sanitation, policing come to mind first. There are shit tons of systems we take for granted that are not robust nor resilient, but rather fragile and vulnerable. All I can comment on is the healthcare system. He's a doctor. Specifically critical care capacity. My assessment is that we have right now is the functional equivalent of trying to stop a runaway freight train with a cotton ball. So he goes on to say, the only other point I'd make is that viruses do not have consciousness nor intent. They're thinking, I don't want this infection to be too bad, so my host doesn't get too sick and maybe die. Or they aren't thinking that. Seems obvious, but I've heard people talk like that. Viruses follow one primary directive and one only, that is replicate. They will replicate as long as there is replication capacity. It is the host's immune system plus nutrition plus genetics plus probably a bunch of other stuff we don't understand that determines how sick one becomes and whether or not they die. Stronger and healthier doesn't always translate to better able to survive a viral infection. Sometimes it's just the opposite, as in 1918 and 1919, which would have been the Spanish flu. I'm not saying that's how coronavirus is, just that the jury is still out. I got stopped out on a Aussie swing on one account. I'm long still on the other account. Back above 9,000. Okay, I'm going to throw that line in the sand because and if we talked about 9,000 is just a random number, but a lot of traders tend to use it. Okay, back to it. So he's not saying it is Spanish flu like 1918 to 1919. It's just the jury's still out on it. So he's not doing that. He goes on to say, okay, one more comment. I'm going to describe what I think would be the optimal response. That is the one that is the potential to save the most lives versus the most likely response given what I've seen historically and in real time. Optimal, convert about 1/3 of our hospitals right now to level 4 biohazard containment facilities, guard the perimeter, protect the staff, cancel everything elective. Every admission, regardless of diagnosis, is treated as if infected and contagious. Staff dons PPE, personal protective equipment, so the masks, the gloves, respirators, at the beginning of the shift and wears it everywhere. If capacity gets full, we start to triage and ration. It won't be easy nor fun, but we are capable. The primary imperative would be to protect the very resources that have the potential to convert a patient's outcome from dead to survived. I'll comment on that here in a minute. At the same time, the general population self-quarantines, and by that I mean gets out of Dodge if at all possible. This all has to happen before the first case hits and may already be too late for many. Most likely, and actually 15 happening. Self-assessed efforts at containment, which are destined to fail, we are basically punting because we are hoping that it won't be that serious. Now, here's the big if. If the healthcare system becomes overwhelmed, then the virus will eventually burn out or become epidemic. The degree to which life continues with business as usual is for others to speculate, but I don't see containment nor cure as likely outcomes for this. He goes on, and I'm going to come back to talk about the taking care of yourself first. Each of us, both as individuals and institutions, organizations, have a choice to make. Either prioritize avoiding infection and do it right, recognizing that this means taking action now that will be considered to be overreacting and irrational, or resign yourself to becoming infected, come what may. Choosing the first option must be an active decision. Any passivity or indecisiveness, you get the second by default, meaning you become infected. So far, based on what I've seen, institutions and organizations are heading towards the second option, complacency, letting it happen. Like I said in my very first comment on this, it is human nature and historically very reproducible behavior to maintain denial in the face of impending threat until it is too late to alter the outcome. Okay, so I'm sorry that I spent that time covering, going so deep on that, but let's actually, let me have a look here, see where we're at. Okay, this is 68. That's what we're trading off of. And we have the 1 hour happening right now. And we are updating in 4, 3, 2, 1. I did not get stopped out. Remember, I stop on the hourly chart, the end of the hour. So I'm long cable. Let's just do my template. I'm long cable on an hourly filled vol breakout. And for those of you that trade with me know that I wait for the candle to close below instead of just ticking through it. And so it looked like it was about to, I was going to get stopped out there, but it rallied back the last few minutes of, or few seconds even, of the candle. So, I mean, it could get a sustained dip. We'll see. So one thing I want to point out, I'm just going to add my thoughts on this. You know, I always want to kind of come back to the way I see things. And in the military, you'll see in movies where there's like a guy getting shot by a sniper or somebody, and then his buddy, his best friend's over there, and he's like, no, and he runs out in the middle of gunfire, grabs him, drags him back through to safety, and then saves his life. But the reality is, usually what happens is somebody's getting hurt, somebody runs out there and they get hurt, and then somebody runs out for them and then they get hurt. And so you can't take care of somebody else if you're dead, if you're infected. So number one, think about like, what do you need to do to make sure that you're in not going to get infected. And, you know, part of that is, one, don't go out in public all that much where you're going to get the, you know, the contagion. So air travel or things like that are kind of, you know, put on hold. Doesn't matter. The world, you know, the world doesn't stop. And, you know, all this stuff's going to happen. yeah, so all that stuff's going to happen. And it's important for you as as an individual, think about, okay, what can I do? Not go out more. Sanitation, you're going to want to have to figure out how to sanitize things that come into your house. Let's say you go and load up on water or all those sort of things, but be careful about yourself. Okay. So get the sleep, stay hydrated, get your nutrients, your main stuff, stay fed, do if you're fasting, get the autophagy going, exercise a little bit less than you think you should. So you want to be, you would rather be in a position of undertraining than overtraining, because overtraining, then your body spends all its time trying to heal itself from that. And that's when something like a virus can infect. Also, I want to point out that you could be a carrier. You may not get the dying effects of it. You may just get sick, especially if you're not 70, 80 years old. But you'll carry it, right? And so now you give that to somebody else. It's interesting. My son's about to be born here in a couple months, and this is all happening, kind of crazy. His immune system is not going to be good. How do you birth? So many crazy things to think about, but take care of number one first. So make sure you are, meditating, ice baths, deep breathing, exercise that is improving you. Make sure you're getting fed correctly. Make sure you're not eating a bunch of crap. Eat the good stuff. You know what is good. Don't try to convince yourself that certain sort of diets are good. You want to be the healthiest you can. And that's never ever in history has it been more important for you to take care of yourself so that you can take care of your family and you can take care of one another. That's my little rant. Dustin, I work in healthcare software at a hospital. We're concerned about the virus and have added items to the software for screening. But I'd have to agree, we aren't prepared for an outbreak. Yeah. I mean, we know that, right? Like, think about, I'm a big fan of history. I do a lot of studying of history. And one of the most important things about it is that right prior, and this is always goofy, prior to World War I, there was max complacency. Basically, everybody was happy. They didn't think there'd been 50 years or so since a major war. Nothing really happened. There was a couple of skirmishes here and there. There was the Monroe Doctrine, where Roosevelt was running around, taking places. But the world had never, they kind of had the Franco-Prussian War was a bit of a world war, the prelude to a world war, but there hadn't ever been a world war. And certainly everyone was kind of going around super complacent and happy. And then all of a sudden, war breaks out. Now, at this point in time in history, the world was like, war, yeah, for God and country. And, they were really excited. There had never been a prolonged campaign in anybody's recent memory. And certainly the 100 Years' War wasn't go over there and fight for 100 years. It, was skirmishes over hundreds of years, 100 years plus. But so it had never really been that time in history. And, this was when the turn of the century. So we'd got out of the depression of the 70s, 1873. You've had the Industrial Revolution move people from horses and farming to cars and to the cities and factories. And the world was just, railroads were everywhere and the world was bustling. It was great. And all of a sudden war starts. They're like, yeah, let's do this war thing. And they go to war thinking that they're going to just go over, do a real quick thing, whoop some ass and, take Kaiser Wilhelm and put him back in his place and, get the Germans back to, or Prussians or back to the Germans at the time, back to their place. And, they were all cousins too. All the royals, they were all related. It was just, put him back in his place, put Uncle Wilhelm back where he needs to be. And let's get back to, taking over the world. Harumph. And then, yeah, okay, they get into battles, they do some stuff. And then it becomes much different. It becomes trench warfare, right? So that's when it lasted years, and it was just standstills, 100 meters between each other, and just they would launch a 1,000,000-person attack, and 1,000,000 people would get shot before, and just in that dead zone, because it was interlocking fields of fire with the machine guns, and you would just do what's called grazing fire. And what that does is that just chews everything up along this line. So that's not war. That's not, this is a coronavirus. It's not war, but it is that complacency that causes so much more problem than what it could be. And of course, if we're in the markets and we turn the news on and we watch Twitter, or follow on Twitter and do all these sort of things, of course, yes, we're hyperbolic and blah blah blah, it's the worst thing in the world. And hey, this could be the point where, literally as I'm saying this, they say, oh no, we found a cure for coronavirus, as the words spew out of my mouth. That could be happening. Okay, so on NASDAQ, we may get a pullback into here that's scalpable. Very nice move on gold. Stopped out, another setup. The thing about it is the distance to the midline is just so high. Look at that, huge bottom there. Okay, we have a failed vol breakout on NASDAQ on the 30-minute. Not a bad idea to take a short there. So now, as you see, the risk parameters to trade this one was just too high. Also, it happened at 2 a.m. my time. So the fill would have been 3 a.m. But yeah, you would have had a nice run. Failed vol breakout from the bottom, absolute bottom, it looks like. Nice trade. And so now you're going to get, we ran these stops. So bears, that's why you get this topping stuff. And now we have what looks like a top in place. So if you are a day trader, failed vol breakout short with a target to about right there on the 30-minute. Dustin says, news, there's a vaccine going into trials real soon. Cool, good to know. But echoing my doctor friend's point here, we need to take this for real on our own. And we need to think about taking care of, number one, you first. I know a lot of people have a tendency to think about, it's all about my children. As long as they're good, I'm good. You need to be there for them when they need you. So think about that. That was my whole soapbox there. Also, the whole point of World War II, same sort of thing. The 1920s happened, and complacency happened, and then risk happened. 1929 happened, right? And that fell apart. And then we had this global depression with hyperinflation in Germany because they were getting punished for World War I. The rest of the world was, oh, super happy, no big deal. We don't have issues. Yeah, that German bunch, they're a crew. That Hitler, boy, he's loud, but boy, he gets them going, doesn't he? And then you get something like World War II happening. Anyway, all that is to say is the complacency is the thing that you really have to worry about. Okay, that NASDAQ short move is taken off. I want to be clear and honest. I did not take this one because I'm taking a week off on, I'm going to let this play out. I know that when we move into these sort of environments, statistically, you have the biggest moves, but also you have the most emotion. And for me, it's risk parameters on the portfolio exposure, because you have to have 200-point swings on your entry and stop. So I moved to a lower area in that, and that's where we have pound. Okay, so also one thing I want to point out on this short, if you took it, first profit target 1.1 R would be right in here. So that would be 89.3325 if you are short. 89.3325 would be first profit target. Max profit target would be 88.70, 88.80 right now would be midline. And that would bring us at about 50% of here. So that's just how this stuff works. Okay. Great having everybody in here. Thank you for all the likes, people. That's super useful and enjoyable. I see that as we get likes, we get more people dropping in. That's the biz. That's what it is. Any other questions we got going? I got some Will, sure. Yeah. Give me a second. $8,900 on Bitcoin. Okay. 1 second. Hey, Bob B, good morning. Okay, question. Will you please show that modified fib? Yeah, sure. So what it is this tool. So up in my upper left-hand corner, up here. So right under the pointer, the arrow. So this is our crosshair. We have the line tool. Now we go to this Gannon Fibonacci tools, it's called. I go down to trend-based fib extension. And so I'm measuring low to high. And nope, that's not it. That's trend extension. I want fib retracement. Here it is, fib retracement. So I'm going to go low to high. And so this is my risk range. And then I'm going to double click on this one. And I'm going to get style. So I'm going to put, it should come in at like, 1 or like 0.5, 0.382, 0.618, all the fib numbers in there. But I'm going to go ahead and change them. And I put in -1, which is -1R, 1, which is 1R, and then 1.1, 1R, 3R, 7R. And so what you can see then is that gives me, this is R, risk. So my entry price to my stop out price. And then the distance, 1.1 times that. So knowing that if I have a 50% win rate, I am going to make money on minus commissions on every trade if I have that. So that's what that's about. Okay, look at this, NASDAQ being resilient. This is an indicator that we're in an always in long. If this thing takes out, that's the best short setup we have of the day, perhaps the week. Most beautiful short setup. And if it stops, that is the market telling you, first of all, if you're trading one full contract, you should be trading one micro contract, not the mini. You should be doing the micros here. If this happens, if we get a hammer close on the 30, or close above here even, that's telling you that the market is far more resilient, the English use of the word, far more resilient than you think it is. So that's people telling you they're doing everything, every dip is getting bought. So far, that's what we've seen today. Every dip, that's totally new. We haven't seen that. That's indicative of bulls taking over. It's just that they started to lose control here. They lost control at the top of the range, fell vol breakout. We pull back and look, it's fighting back. So that could have been for those that are trading it, there you go. Now you understand. That's information, right? Bulls lose control here if that's the case. But again, we're also in this highly energetic and emotional time in the market. So things are going to do differently. Things are going to act differently than they normally would, which is why I'm sitting here on the sidelines as a commentator, as opposed to the, out on the field getting my butt kicked. I'm hungry. I got up and got my workout in first thing this morning and didn't quite, I wanted to make sure I'm just in the zone right now. And I just wanted to make sure that I got my workout in so I didn't have to stop and in the middle of, prime crank session to work out. All right, what did I promise on the Twitter? I promised I would talk. We talked about coronavirus. FX, Bitcoin, and bonds. Yeah, let's see. Where are we at bonds? Bonds should have been dumping as still nothing on the bonds. Look at that. Let's take a look at the big one. Yeah, nothing. So with equities rallying as hard as they are, bonds not selling off in any way, that gives us enough reason to say, yep, I'm staying on the sidelines here. What else did I talk about? I said I was going to discuss today. Do you guys got any questions while I'm here? Oh, we're going to cover prop trading again. Unless there's no questions. If you do have questions on prop trading or just anything, throw them in the chat here. Otherwise, let me, I don't think we need to cover it anymore. I'm going to do a video on it. But some of those of you who've been following me on Twitter know that I'm doing about 4 hours of manual back testing a day. I've cranked that up from about an hour. And actually it's 56 minutes, not a full 60. So to be clear, that's 220 minutes. So 3 3/4 of an hour of back testing, because I set my timer at 56 minutes so that I can take a 4-minute power nap. Just kidding. You know, kind of like jump around, get some water, fire up another coffee, maybe do some push-ups or some stretching or some jidong is called, I think. Maybe a little foam rolling or something like that. And then I get back into it. But some of the things that I've been, that's really has been super impactful is how ineffective short-term trading is using technicals. And so I'm going to put it basically everything under a weekly chart. Technical analysis, systematic trading is substantially better on a weekly to higher time frame. And I guess you could probably do a 3-day time frame too. And so when I find what works along the shorter time frames is price action. And so that's a different tool. And you know, we kind of covered this one yesterday. I had somebody asking me these questions, and you know, with everything that was happening, I wasn't able to put a solid answer in there. So what I found on my back testing is if you remove a lot of what's going on, so you see we had a top, came back, another top reversal and a sell. This is one of the best selling setups out there. This is going to troll everybody. And then now, if this doesn't take out that high and close higher, now we still have indecision. So the price action is saying, well, we still have the ability to go lower. We've just worked off that. If it does print a bullish candle amongst this great bearish setup, that is an indicator that, again, bears have lost control and bulls are getting a lot more aggressive. If bulls can't do it again, bears are going to start feeling a lot more confident. They're going to place a stop up here like we did, and they're going to look to get short. So what I found is that the longer you take your timeframes out, the better your returns are on using tools, you know, like trend following, especially. Trend following strategies are especially useful on longer terms, so weekly and longer basis. Whereas on dailies and lower, the mean reversion strategies, 80% of the time, these are my statistics right around this, 80% of the time mean reversion or breakouts fail. So let's call this a breakout. this would be a failed breakout. And what is a failure? Failure to extend the trend. Okay, so if we extend the trend, we are in the 20 percentile move, which means this could just take off. So for me, I start looking at strategies like this saying, okay, I've got an 80 percentile move, the failed vol breakout, a reversion, a mean reversion. So I'm going to take that mean reversion trade almost every time. If I get stopped out on a mean reversion, either we're just in slap happy trade time, which might be the case, but more than likely we are resuming back into a bull market and things are going to get, we're going to be in an always long, whereas this was an always short, right? Every one of these longs got stopped. And now we're at a point where this beautiful sell setup is going to fail. And if that happens, we've got a minute, minute 55 seconds left. You're going to have traders putting a buy stop above the high of this hammer-ish type setup, which should run. And then that's going to, because now we have us bears, me, well, not me, I'm not trading it, but if you took the trade, you have a stop up here, a buy stop to cover your short, and back down. Will be day job calls. Thanks for all the info this morning. Have a great day. You got it, Will. Again, I know I have an email, but boy, I'm building this massive system. Literally the best thing I've ever built in my life. Like there is nothing I have built that is better than this thing. So we got about 5 seconds on this candle. It's a bullish candle print. I'm going to take the witchcraft off the screen. Wait. Oh, I see what happened here. Okay. So I'm going to take the witchcraft off the screen and let's see if this thing does take that low out, then we do have a move. We have an inside bar, let's call it, on a breakout failure, inside and then down. We have 30 minutes now, so this can go higher, troll out the weaker bears, stop them who have stops here. The stronger bears, those who would have wait for the 30-minute bar close, won't get stopped, and then that could move there. So it's either spike high and low, or now this was our spike high, and now we just take out that low. Again, though, a move above this is going to bring bulls back, and if they're strong enough, a tick above here could really run things, because that'll bring this up, and then that'll cover these guys who have stops right here, and that brings us up to, so that takes these shorts out of the game, opens up the world here. So pretty dramatic neighborhood. That's how these trades go. Take a look at my pound, still struggling. Gold did come back pretty nicely, but couldn't really do much. Bitcoin coming down to the bottom of that bull flag. Bonds didn't do a thing, not a thing. All right, I'll be right back. All right, I'm back. Euro is doing something here, huh? Let's have a look. Good, sir. Oh, yeah. Oh, look at that. Euro GGP should be ripping. It is. Okay, let me get to my charts. Yeah, Euro's ripping. Look at that. Euro pound taking it out. Aussie 4-hour filled vol breakout setting up. That's looking good. We're going to have some news there. Euro pound. Euro pound doing the vol breakout thing here on the 4-hour. Double bottom on gold. Very nice. Touch of that Bollinger. We got compressed volatility on gold. Interesting. Good eye on the euro, Bob. Thank you for that. Needs music in this house, doesn't it? Look at that euro rip. It's been a, nope. You pretend you touch it and then you really don't. Look at that. Look at that. Just, so I got long on that double bottom last week, but geez, look at that. Just a vacuum. So lots of potential up. First of all, right here is our first potential, and we blasting above that. Next, we're going to be paying attention to this 109, 110 area on the euro. 60. Let's get our gold we're watching. NASDAQ, where's euro pound is looking nice. Who's ugly? So, yep. Dollar. Yeah, it looks like euro pound's the one to take on that trade. Go ahead and watch. Who else is moving well? Nikkei's look, or the New Zealand, sorry, New Zealand dollar's looking good too. Good eye, Bob. Thanks for showing me that one. We're still paying attention here to Nikkei, NASDAQ. Boy, what is up? Words are hard today. Okay, short, filled vol breakout, short on NASDAQ, 30-minute, filled. Then we got this little guy going on. Now we got this guy going on, looking a little interesting. The short is in play, but with these bears coming in trying to do stuff and not being able to do it, and bulls looking to take them from here, That makes always in long. And you kind of, at this point, if this gets taken out this high and closes above that one on the 30, it's a good spot to stop out, reduce risk a little bit, and then reverse on the long side as a potential. Okay. I gotta order my butcher box. Yes. Bitcoin 8,700, just heading lower. Let's take a look at the markets. Okay, pound still doing its sideways thing. Dollar coming off, which is where we're getting a good amount of that Bitcoin or the euro. Because if dollar's weak and euro strong, euro USD is the one to go after. Everybody's screaming now. All right, we got about 20 minutes and then I'm going to get on to my work day. There we go on the NASDAQ. So one thing to keep in mind too is that's the pound and not the NASDAQ. Keep that in mind. So this bears take over. Bulls come back, starting to get weak. And if that last sign of bullishness can't hold, then we get that pullback. And then you get bears a little more aggressive and you get bulls scared. So those who got in down here are going to start locking in profits. And that's how we're going to get some moves here. All right. What do I order for my beef? So the NASDAQ trade is okay. We got a fail ball breakout. And we've got bulls putting in a couple of attempts here that got thwarted. Also, that 9,000 level is going to be stressful for people. Dumping on Bitcoin. Bond's still not doing a thing, so that leads me to believe that this little rally is nothing more than a tradable market. Oh, I'm starving. Yes. Bummer. Okay, there we go. This is, if this one gets taken out here, then we have our profit target in place at 89.33. And it looks like we ticked there low 89.72.25, 89.71.50. So we did break that low. Again, it could just be trolling. If this is where bulls will have to step in and bring this back. We've got 9 minutes. They'll have to bring this back. If this closes as a bear bar, that is, and down near the bottom of its range, that's where we start seeing a lot more drama. So this will be the 1.1 hour profit target. We got about 10 minutes on the candle, and I am wrapping up my day here. The only position I have on is my pound. Pound long. Where are we at? It's on this one. So pound long. Still off the 60 chart. We're watching the NASDAQ short off the 30. If anybody's in the trade, has any questions, hit me up. We have an Aussie failed vol breakout. Risk too far. Never mind. I'll pull up 60. So we are going to have a 2 hour, a 1 hour, a 30, a 15, or 30, a 20, a 15, a 10, a 5, and a 1 minute candle update here at the top of the hour. So things could get a little wacky here, as they do. You guys got any last questions before I drop the mic? Not really mic drop day. So far, playing out. Again, what did we see? We saw the bulls coming in, doing what they could. So we had a great sell setup. Bulls came back, fought it off, and they lost it. And so they put stops below here. Now bulls are going to have to start dumping. Bears are seeing that, and they're like, yep, they sell stop below there, and they're in. We're on our way to profit target here. Now remember, so that line was just breached. I had that there. This is our actual position. So let me just label. So midline profit target is the reach goal. The first target would be 1.1 hour. If you're trading multiple contracts, you take half here, move your stop to break even, unless you're feeling more grand, and then you can get like almost a 2 hour here to the midline, take that. Or if you're feeling really excitable, Trail stop it. Personally, the way I take these, I take profits on mean reversion trades. So I'd be taking profit here at 1.1R. It's going to happen at, I mean, we've got 5 more minutes. I'm not sure, you know, it's not a given that we're going to hit it, but it's a nice setup. When I say we, I mean any of you who might have actually taken the trade. Dollar dumping hard. Gold kicking up. Something's happening. Yeah, something happened in there. Where we get? Gold starting to continue to move to that midline on the 30. NASDAQ coming in. We got the last few minutes of the hour, the 2 hour. Russell giving it back. You can see Bitcoin basically bouncing off that little line, mildly entertaining. Must have been some sort of news or something. Turn that down a little bit. All right, last couple of minutes. Any other questions, guys? We're closing up on the 2 hour window, and I've got a lot of ass kicking to do. I'm building out that massive product, that swing system, long-term system. And I'm really excited to manually do all the dividends. It's such a grueling process, but needs to be done. This is where the billions are made. Bond's kicking up. All right. Well, thanks everybody for joining. We've got about 10 seconds. Let's take a look at all our universe here. The NASDAQ short's playing out 1 hour to the target. Midline is the reach goal if you're going for it. We have a 30-minute candle. We have a 2 hour, a 1 hour, a 30, a 20, a 15, 10, 5, 1 minute candle, all updated at the same time. So your longer term traders, swing traders are making a decision. Your shorter term traders are making decisions, and it's all happening right now. Let's take a look at our longer term here. Nothing exciting going on. Aussie getting dumped as usual, while Euro is putting in work, man. Euro is doing that rally thing. A little bit of counter trend. So you'll notice that as soon as that candle updates, we get some slap happy moves at up, down, up, down. There's repositioning going on at the top of every hour. That's just what that is. So I think that's it, guys. If anybody has any more questions, drop them in there. Otherwise, I am off. Good luck to everybody who's still short this NASDAQ position. Get your 1.1R, get your possible 2R if that's what you're here for. And it looks like 1.1 is about to get nailed. And gold is still pushing higher. Dollar still weakening. So profit target on 89. So we're at 89.3325, I believe, is what we had as 1.1R profit target, but you can do the math. Otherwise, that's it, people. It was great having everybody in the room. And as always, good questions, good conversation. We'll be back tomorrow. It looks like we are going to make this an official chat. We're going to formalize it, and we're going to put in some work and get better tools so you guys can see the screens better, more focused time frames, and actually go. This was basically an experiment for me to see, how interested I am in doing this. If there was interest by people, one, because I mean, first of all, I have to enjoy doing it, right? Like if I don't enjoy it, then I'm going to put together something that I'm not going to want to do, and I'm just going to abandon it, which isn't fair for you guys. At the same time, I want to make sure that it was useful for you guys. So this has been an experiment. This week is profit target hit on NASDAQ. Nice. This week was a good stress test because it was such a crazy week in markets, and seeing how, we navigate that. Hopefully you navigated it with me with, taking a step back and just watching, keeping your head in the game, but just kind of watching and seeing what's going on, as opposed to trying to go in there and make back any, big losses, or try to, hold on to these winners for far too long. We lower risk in high volatility markets. And Euro again moving, dollar dumping, gold rocking, and I'm gonna guess nothing on bonds. Bonds higher. I'm probably gonna take a no fill on this, though we could have another inside day on the notes. But yeah, that's it, guys. Thanks everybody for joining, and we'll be back tomorrow probably. And I hope you guys learned something. I did. I always do.